Welcome back to this week's episode of the Fire Podcast. I'm your host, Slater Stelling. Alongside me, our co-host, David Hinderleiter. Another very special guest today. We're joined by Eric Souza, Senior Portfolio Manager at Capital Advisors Group. Eric has over 2 decades of experience in fixed income, having managed institutional portfolios across MBS, CMBS, ABS, and corporate credit at firms like Schwab, Barclays, and Silicon Valley Bank. He holds a Master in Finance from St. Mary's College of California, and his career offers valuable insights into fixed income strategy, risk management, and the evolution of institutional bond markets. So thanks for joining us today.
Thanks for having me.
So we kind of just want to start from the basics here for those tuning in that haven't heard a bunch about fixed income. I know our students are always stocks, but even bigger than that is the bond market, way bigger. So what is fixed income kind of in plain English, and why should college students care?
Well, I'll compare it maybe to the difference between what a stock and a bond is at a very, very high level. I mean, I think we all have access to ChatGPT, so if anybody really want to know what a bond is, I'm not here to necessarily say what that is, but kind of the differences of what you may not get out of something, like a regular web search on what a bond is. But think of it as stock, you're investing, right, in a company. Bonds, you're lending money to a company. Really, at the end of the day, that's really kind of the biggest difference. You can think also from a risk perspective, stock is it can go to zero. Whereas a bond, I mean, for the most part, 99% of bonds, if you hold it to maturity, you're going to get your yield, your total return. So there's nuances like that, and that's how we kind of look at it, especially from a lending view of how you're lending the client's money to a company. And really, what we like about bonds too is, in a stock market, take for example John Deere. There's one John Deere stock. There's hundreds of John Deere bonds, different maturities, different credit ratings, and that's what's got for me. Of course, now I've been in the bond market for 30 years, so for me, I love the bond market. So that's why I like the difference of it is we used to always kid with the equity traders on the other side of the desk that they would just have one bond, one stock to worry about, where we have to sometimes hundreds of bonds to look at and all different types of risk parameters. So we look at it as it's more harder than managing stocks, but.
And how would you explain your job? What do you do exactly on a day-to-day? And then when someone asks, what is a fixed income portfolio manager? How would you answer that?
Sure. So as a portfolio manager, I mean, and there's different types of portfolio managers. So for the, there's ones where I've kind of have experience on different types. So there's portfolio managers where you can work at a, say, mutual fund. And I used to manage funds. And there you have less client contact. You're really just managing the portfolio. Your head is down. And you're just, kind of buying and selling bonds and managing the portfolio from that perspective. And you may speak with 1 or 2 clients a year or a month, whatever it might be. And that, again, think of that as on the fund side, a mutual fund side, to a certain extent, maybe even hedge funds. On the called the SMA world, separately managed account world, that's where I'm at. And so there you're kind of individually managing individual separate account portfolios, institutional portfolios. So from that perspective, you're kind of managing, again, most client portfolios on the SMA side, they're going to have a specific investment policy, different cash needs, risk parameters. Whereas if you're managing, say, on a fund side, you're just, clients are just kind of owning shares of that fund, and you're just managing that particular fund. So what the difference, at least from a portfolio manager on what I do, you kind of wear 3 kind of different hats. You're managing the day-to-day portfolio, you're speaking with clients, interacting with clients, and then there's kind of a market and research kind of hat. So on the portfolio management side, kind of on a day-to-day basis, you're responsible for the overall risk management of the portfolio. That is everything from security selection, sector overweight. Do I want to be overweight credit versus governments? Maturity distribution. Do I want to be in the front end? Do I want to extend duration? And just that's kind of the day-to-day of how you manage the portfolio. We work directly with kind of our research and credit teams. Think of it as we work together, but ultimately the portfolio manager has kind of, I won't say the final decision, but ultimately I'm getting our credit research team is coming up with, say, approved issuer lists of all these different, say, credit issuers, and I work with and I give direction to the traders on the specific portfolios. Okay, for this XYZ portfolio, I want to, here's what I want to buy. I want to have, this is the percentage I want in credit, in governments, in different maturities and things like that. That's kind of a big high level area of what we do from a portfolio. I would say though, as an SMA, you're really working directly with clients. Again, some will have not only their own kind of investment policy, but different risk profiles. Some will say in a policy will allow them to buy credit or even ABS, but their board is very conservative and they'll give us restrictions like don't buy ABS or don't buy credit. So there is some kind of customization that kind of goes along. So even though each portfolio is kind of managed separately, we do kind of overlay that with our investment themes. So from investment themes, we have an investment committee where we meet monthly and we kind of get an idea of where how we want to manage the portfolio. Do we want to overweight, underweight, where we feel duration should be in portfolios? But we take that and kind of manage the portfolios in conjunction with those investment themes. So perfect example is a client may raise some money, maybe raise like $100 million, let's say. We'll work with the client with their current investment policy, what are their cash needs, and then construct a portfolio around their investment policy. Now, their policy might say, I can only go out 12 months. We maybe wanted to go longer. So I have to think of it as the investment policy, the guardrails of where we can be, and then we overlay that with our kind of investment things within the portfolio.
That's awesome. And then so how does the structure break down, just so the students kind of understand where you come in maybe as an analyst and then all the way up to portfolio manager? Is there someone above you? Kind of how does that all break down?
I would say there's no one really above me. I would say the portfolio manager is the kind of last person to make the decision. I mean, we're the ones responsible for the overall, again, like I was mentioning, the overall risk of the portfolio, and that means making those final decisions. But we, again, take that, we kind of work in conjunction with the analysts. Like, for example, I may like a particular company that we want to add to the approved issuer list, but I can't just buy that into the portfolio. There's these checks and balances in place. Our credit research team has to do the research, look at the company, look at the balance sheet, probably all the stuff that you guys are analyzing in school, and coming up with, okay, yes, we agree with that. We'll put that on the approved issuer list. At the same time with traders, the traders will only buy from the approved issuer list. So we work, at least when we're coming up with kind of these investment decisions. Again, like you were saying, the analysts kind of just say, here's the approval of the issuers, maybe different how far you can go from a maturity standpoint. Then I work with the traders and just say, okay, here's what I want to buy. I don't necessarily tell them, okay, buy JP Morgan, buy John Deere. I tell them, buy me a 9 to 12 month industrial A3 A- bond type of, and they'll look at the approved issuer list and kind of fill in the holes. They'll look at, okay, what does this portfolio currently own, and what do they don't own, and add to that.
So when doing your research, what are you reading? Where from? Like what platform? Is it Bloomberg? And then what factors and trends are you looking for?
I mean, I'd say a good portion of my day and weekends are reading a little bit of everything. Wall Street Journal during the week in the morning, Bloomberg, news, of course, and just that's first thing kind of in the morning is what I do, is kind of get an idea of what's going on in the markets and monitoring economic data that comes out, and then we get so much research that gets generated in our industry from all the different broker dealers we work with, and I would say every portfolio manager out there has their own go-to. I prefer this economist or this strategist, whatever, and I have my own guys that I like and that I'll read. And so during the day, it's a lot of that, just kind of reading certain research reports on a certain kind of topic, getting an idea of what different broker dealers or strategists are thinking, or what other economists are thinking. Weekends is also Barron's weekend, Wall Street Journal. I'd say for me, it's if I'm not trying to analyze what needs to go into my fantasy football team, it's markets related for sure. So
awesome. And then so you've been at big shops, and now you're at kind of a smaller shop. What are the benefits and the drawbacks of where you're at now and where you have been before?
Yeah, I mean, I love working at a smaller company. We have maybe about 30 employees, and I went from a company, when I was at SVB Asset Management, part of, again, they were part of Silicon Valley Bank. I forget how many thousands of employees we had, but I definitely prefer now. This point in my career, I prefer that. You gotta wear multiple hats, very close with all the employees of the company. So that's just my bias. That's the benefit is you get to know everybody pretty well. What I would say is, so as an entry level position, I would much rather kind of where I started out at BGI, with a much bigger company, with fixed income group, equities, currency, strategy. I mean, they have all different types of things. So you kind of, especially when you're getting an entry level position, you may not know this is exactly what I want this job to be, but it opens the doors to maybe move to different groups. That's basically how I got my job. Was I got into BGI working kind of more in a fixed income kind of reporting group, started working with the fixed income portfolio managers, and was working on the trading desk with them, and that was over. I knew exactly that was what I wanted to do, and it opened the door for me. I think there's pros and cons to both. I think entry level, it's great to be able to get into a big company because it can open the doors for you as well. On the flip side, though, if you work at a small company, you actually also, even if you get an entry level, can probably get more exposure easily to doing a variety of different things. So I don't necessarily think there's good or bad or pro and con. I just think it's more about finding that role and what you want to do. I get kind of with everything, there's always pluses and minuses, right? So
awesome, thank you. And the job market seems like it's changed in the past 5 years post-pandemic. How would you advise your students now to seek for internships and get ahead?
That's the number one thing as far as to break in the industry is internships and networking. I saw Dr. Souza's podcast, and again that should be a TED talk on how to break into the industry, because that was definitely the best. And that's the key thing is, I would say the two things that get into our industry, internship and networking. Those that by far. Start, like you were saying, start as early as you can. And my advice too, and I talk to a lot of students and mentoring on how to, with interviewing skills and maybe how to break into a particular career. I've always said that even if you can't get the perfect internship that you want, that's fine. Any kind of role that you can learn some sort of skill that's transferable, right? That's the biggest thing is that's really important. And I remember talking to one student from St. Mary's probably several years ago, and they couldn't get an internship. They weren't hiring. I said, call around to money management companies or private wealth companies and just say you'll work for free for the summer. And that's why it's maybe you got to think of it as a career path. You put in what you get out, and that has actually helped them, and they ended up getting an internship that way. So that's I can't emphasize that more. Internship, and then any kind of networking you can do. What's great is I wish when I first started my career we had something like LinkedIn. Back in the day, you had to just call people, and it was just the old school kind of research that way. So I would use LinkedIn. What I would recommend to students is don't necessarily go out and just say, hey, I'd like to I want a job here or whatever. Build a relationship first. And I think you guys talked about meeting up with for somebody for a cup of coffee or having that elevator pitch and all that stuff is definitely true. But you want to build that relationship first. Get to know how they got into the industry, what do they like, what do they don't like. Build that over time so that when something does become available, or you hear about a job that's you want to get hired at, and they know somebody over there, you can then ask for that. That's where the networking comes in. Everybody thinks networking is just give me a job, or things like that. It's building that relationship so that hopefully down the road you can then ask for a favor or introduction or whatever it might be.
That's awesome. So you kind of answered part of my question there, but we work with a lot of students in the Fire Club, and one of the reasons we created the podcast was we have a lot of students that are coming out of St. Mary's, and we're not a target school for these big banks and private equity firms, venture capital, that sort of thing. If someone wants to get into fixed income from St. Mary's, what are those transferable firms that you were talking about, where someone can go learn something and translate that to fixed income, maybe easier to get hired straight out of college?
Firm wise, I mean, it's at least for fixed income. There's not a lot of companies, let's say, in the Bay Area. Again, we've talked about, I think, in one of your previous podcasts, definitely New York is the financial capital of the world for sure. There's a lot of money management companies here in the Bay Area and also down in Southern California. There, especially getting that internship, that would be the number one thing. If you get that internship, and even if it's not on the fixed income desk, or if you want to learn about bonds, if they do bonds, you do what I do. What I did is I went to the portfolio managers and just kind of basically almost treated them as my mentor. Like, hey, what do you do? How do you do it? Let me learn from you. That's really kind of what you're going to have to do, at least from learning that, getting some sort of experience and exposure. But at the same time, learning, knowing all the language, the lingo, that is also help to it's key as well. That kind of helps learn, and then you can kind of grow from there. But I would also, when you're talking to a lot of, you're trying to break into fixed income, talking to a lot of either professionals like myself and other people, going to events and seminars. That's really how you're going to kind of break into it. I'll give you an example. When I was hiring for like a junior trader years ago, I didn't care if they knew about bonds, and what I was more interested in is their work ethic, and also were they interested in the bond market, and I wanted them to convey that to me. So that's that's, at least from my perspective, that's what especially for an entry level, I'm more hiring a personality than I am, how did you do in your fixed income class? I could care less about that.
Got it. Thank you. And like you said, there's a lot of juniors right now, juniors and seniors, who know a lot about the equity market, know a lot about the stock market, but we don't learn a lot about the bond market in our classes. So where would you recommend we go find that information to learn more? I
mean, YouTube is probably some of the best stuff that's out there to learn. There are topics that are covered pretty extensively in there. So that's probably the first thing. But also just understand, if you pick up the Wall Street Journal or Bloomberg, I know you get certain free articles online. Getting familiar with just that is going to help you to kind of learn more about fixed income. I would say the difference between, like, for example, listening to CMBC is going to be more equity focused, but if you watch Bloomberg TV, very more heavily fixed income focused. I think if you listen to Bloomberg TV, and that's what in my office, at home, I have Bloomberg TV on, the entire day, because they're mostly just talking about the market's economics, rates from a kind of a fixed income tilt. So for fixed income, Bloomberg versus CNBC, which probably a lot of other people are more familiar with, at least on the equity side. YouTube definitely for sure is kind of the best route to go for learning, and I think a combination of those two things. The SIFMA website, I would say, also has a great amount of research and tools that they have on there, and it's definitely very heavily weighted on the kind of the fixed income side. And then really you'll find you might be able to get some broker-dealer access and research from people, especially if I know you've had other people that you maybe talking to that work at, say, a Morgan Stanley. Any way you can get that kind of research is probably the best. But free-wise, I think those are the two: Bloomberg TV and YouTube. You'll learn a lot. Wall Street Journal, it's going to cost, but it's worth it.
Yeah. Thankfully, for the St. Mary's students watching, we get those services for free, so that's
there you go.
Amazing.
Take advantage of that.
But I wanted to go back a second to what we were talking about before about the personality you're looking for. What type of personality is it that thrives in this environment?
I always work ethic, and I know it's kind of hard to say what that means, but think of it as the first person in, last person out. A type of person that looks at something and says, they've always been, this is how we've always done it, but they'll look at a way to improve it. Those are some sort of like the personalities I'm looking to hire. But also, I remember when I was hiring for a junior, it was a junior fixed income trader. And I remember the first person I interviewed, and this would be kind of gearing towards a interview, more of a what to say, not to say in interviews. But I'll never forget this. It was the first person I interviewed, and again, the job title was junior fixed income trader. And I asked him, "What do you want to do, like career wise?" And he went into everything about investment banking and M&A and cap-in models and nothing related to fixed income. So I remember I stopped him mid as he kept just rambling, and he just went completely white. And I just said, next time you're interviewing and your hiring manager asks you what do you want to do, the job you're interviewing for is the job you want to do. And I've said this at a couple times I've spoke here at St. Mary's to students, and I've said, I'm not saying to lie, but you need to convey to whoever you're interviewing that this is what you want to do. I've had an example where there's a couple students that was on one day interviewing for like a currency trader position, and then the next day was going to be interviewing for an equity analyst position, and they asked me my advice on what if they should bring up either ones. I said absolutely not. When you're interviewing for the currency trader position, you need to convey to them that's all you want to do, and explain why. And then the next day, when you go into the equity analyst position interview, you just convey that this is all I want to do. That's kind of a way to kind of help get into it. So learning some of those interviewing skills, hopefully, it'll help. Some from at least with that process of getting in the door.
Awesome. And then hard work and conviction obviously has to be coupled with technical skills.
Yeah.
What platforms, like maybe Excel, maybe like coding, what platforms do you see that are helping new analysts thrive in these positions?
I mean, for me, I would definitely say Excel for sure, especially if you can learn how to write macros. I know a lot, and at least for what we do, there's not a lot of programming that we have a technology team that kind of works on that. But for entry level roles right now, I think that's a key. So Python are, I think, is kind of standard of programming language. Excel, learning how to write macros, those are key. But also, if it's going to be a role that's some sort of client relationship, which again my role is very client facing, learning PowerPoint presentations and things like that is and how to create charts, and that is definitely very key. So those are some of the skills, but I can't emphasize more. I mean, I am probably on Excel all day long, every day. I mean, there's nothing that I'll do from a portfolio management perspective that I'm not using Excel.
Yeah, that's awesome. And kind of, I wanted to segue to something we talked about yesterday, but I want to make sure they all hear it is kind of as these AI starts replacing some of those roles, we were talking about how fixed income is going to be irreplaceable, if not one of the last sectors within finance to be able to be replaced. Can you kind of shed some light on that?
Yeah, I mean, I think it's, AI is right now, it's more of so far been like a glorified Siri in the sense of like how we kind of use it on I wouldn't even say day-to-day basis, but how I use it is if I'm writing an email to a client or I'm doing some market commentary and I just, certain sentences just don't sound right, I can just go from an AI perspective and say, polish this up and rework it. Or I have an idea of some analysis I want to do or a chart. I can just type it in, just say, show me a chart like this, and then I can kind of get an idea, yeah, that's what I like to look at, and then kind of dive more into it. Where you're going to see more of the implementation is kind of probably more on the equity side, because I mean quantitative trading, I mean that's been around for a long time, and that's all programming, right? That's you walk into those quant trading floors and it's completely silent because it's just it's humming with just the computers just doing all the trading. Fixed income side, for the most part I'm still trading. We still trade bonds now as we did probably a decade ago, via Bloomberg chats. Sometimes talking to somebody on the phone, and and part of the reason is it's, at least for the fixed income side, because there's so many different types of bonds, there's so many different QSIPs, you can't really, you quantify that or do that from a kind of a high frequency trading, perspective. There is definitely, at least on the treasury side, there is some sort of programming that can be done. But if you're trading corporate bonds, you're trading ABS, it's going to be, I don't really, in the short term, seeing AI kind of coming up with how to manage the portfolios. AI sometimes can't even give me the right answer. I think I mentioned this to one of our calls. I said, I've found errors in ChatGPT's stuff on FOMC stuff data. So I think there's still a lot to be kind of worked out. Maybe I think in the future there might be able to things do on if you're managing maybe multi-sector kind of portfolios, doing some analysis, back testing on what is equities versus fixed income going to look like, that sort of thing. Maybe so it can help from a sector allocation standpoint, but for individual fixed income portfolios, it's I think it's going to be a long. I think hopefully I'll be retired by then. So.
And now during interviews, students are competing with people who have access to AI, so they are maybe using AI to help craft their answers, maybe help craft any models that you guys would be using for any technicals. How do you compete against those students using AI to maybe have an advantage over other applicants?
I think for me, you definitely want to have some experience of course, using AI, but you have to, I remember, I think it was somebody had mentioned, this is a great example on one of your podcasts, that in the very beginning, people were kind of writing reports or just, and you're not really understanding the data. And I think when you're talking, especially if I'm talking to somebody, I'll know if they understand something or if they've just read something. There's a big difference. So I would definitely having the AI experience and learning how to use it, but at the end of the day, it's not going to get around truly. People with experience are going to know who knows who knows what they know, and is who just kind of just read something or asked a question on ChatGPT. So
yeah, we've noticed that kind of within our own club, and it's very easy to tell, especially when you're the one knowledgeable about the information.
Mm-hmm.
But kind of before we wrap up here, what's one thing you wish you did in undergraduate or maybe in your finance program or your master's program that maybe you wish you did at the time that would have set you up for success in your early career?
I wish there probably even more more networking. I mean, I kind of lucked out kind of doing that later in my career. But that's why I think when I speak to a lot of students, that's one of the things I always recommend. I did have an internship when I was still in school. That really helped me kind of get just first of all have it on your resume, but helped me kind of figure out what I want to do, not wanted to do. But yeah, I would say that's by key, at least for an undergrad. For graduate, it was just more of, and this is, of course, probably schools don't want to hear about this, but a lot of times getting a master's degree, it's just, I need that line item on your resume to get to the next role. That's literally it. Unless you're really going to be looking to change careers or you're going to go to, like a Ivy League school to go into some sort of industry that you don't have access to. Other than that, I look at it as more of it's one of those things you just kind of need. So for me, there was nothing really. I was trying to get as quickly as I could because I love what I do. I love the fixed income market. I wasn't going to change careers. I was going to keep doing what I want to do. But this is all a game too. You have to realize, okay, if you want to get to that next level, you need a master's. Sometimes you'll see a lot of job descriptions, MBA or CFA, right? And so you need some sort of master's degree. So for me, nothing really would have changed from a master's program. But can't emphasize enough internship, networking, and you'll be good to go.
Well, Eric, thank you so much. I think this went awesome. We loved having you on. We hope to have you on again soon. But yeah, make sure to like and subscribe to the podcast. We're going to have industry experts every week. And yeah, stay tuned.